Markets have closed in Korea on this Monday, and that means it's time to look at the week ahead on the global markets. And for that, we have on the line Dr. Hwang Sei-woon, Research Fellow at the Korea Capital Markets Institute. Thanks for making time today, Dr. Hwang.
Good afternoon.
Now, stocks on Wall Street are sitting right on the edge of all-time highs, and this week we'll have U.S. GDP figures for the first quarter. What industries should we be watching, and what's the outlook there?
We need to pay more attention to a few blue-chip companies. Amazon, Boeing, Microsoft, and ExxonMobil are among more than 140 S&P 500 companies reporting quarterly results. 74% of the companies reporting so far have beaten expectations. Based on forecasts and actual reports, earnings for the S&P 500 as a whole are expected to decline 1.7%. The first negative quarter in 3 years. Some forecasters had projected an earnings decline of 4% or more. The equivalent of the economy's first quarter report card will be released Friday with the first reading of GDP. The outlook for first quarter growth has suddenly shifted upward after a series of better data releases later in the quarter. Surveys show economists' median forecast is now tracking at 2.4%, way above the 1% expected earlier in the quarter.
Yeah, we'll see how the markets respond to that later this week. Now, the Korean government has decided to submit its proposal for an extra budget to Parliament on the 25th. What effect has that budget, or will it have, on local stocks? The Kospi closing just about even today. And what else should be on our radars?
Okay, let me summarize the market movement today. First, Asian shares slipped on Monday, weighed down by the underperforming Chinese stocks. Japanese Nikkei gained just 0.08%, and South Korean stocks closed just a little higher Monday. The benchmark Kospi rose 0.02%, and Shanghai stock market declined 1.71%. Korean government is planning to introduce a supplementary budget worth less than 7 trillion won this coming Thursday to cope with fine dust and boost the slowing economy amid growing downside risks over worsening economic conditions at home and abroad. The government has projected the nation's economy to grow between 2.6% and 2.7% this year. The supplementary budget will be able to enhance the economic growth by about 0.2%, and this may have some positive impact on Korean stock markets. Also, U.S. trade talks with China could be important in the week ahead. With negotiations continuing and investors awaiting news of a summit between President Donald Trump and China President Xi Jinping, a few economic indicators such as Q1 real GDP growth and consumer sentiment, which will be released on Friday, are among what to watch for the week.
Yeah, as you say, the U.S. and China reportedly closing in on a deal. We also have the EU and the U.S. trading threats over airline subsidies. Now, markets in other regions haven't yet opened after a 3-day weekend on Wall Street, but what are investors thinking on these issues?
The United States is threatening to impose tariffs on European goods worth billions of dollars, intensifying a long-running dispute over aircraft subsidies. The European Union is preparing retaliatory tariffs against the U.S. over subsidies to Boeing in return. This is significantly escalating transatlantic trade tensions. U.S.-China trade talks are progressing. The U.S. and China are locked in negotiations to end the 9-month trade war that has roiled markets and threatened global growth. The dispute has already shaken the world economy and caused companies to reconfigure their supply chains. Even amid rising expectations for an agreement, many economists warn that the global stock market still remain vulnerable to trade tensions and urged government to be very careful.
All right, got it, Dr. Hwang. Thanks. We'll have to leave it there. Thank you for joining us this afternoon.
Thank you very much.